All right, here we go. This is week 7. We're going to see how everything has gone for this week. I am Wesley Yates, and this is our financial freedom strategy that we are doing. As always, I am not a financial advisor. This is not financial advice. This is nothing more than me sharing with y'all what I have been doing for my family and our investment strategies that we're doing and how those are looking. So, if you need financial advice, please go do your own research or go talk to a financial advisor. I don't have a financial advisor myself, as I like to do my own research and do with my money what I feel is best for me and my goals. All right, now that that's out of the way, let's do another recap over our strategy. If you are getting started, we are using Robinhood. There is a link right here at the top. If you would like to look at signing up for Robinhood, I believe we both get a free stock that way. Everything that I'm doing here is free. I'm not selling this. I'm not seeking donations. The only thing that we're looking at is if you use any of my links to sign up, those organizations will give me some freebie. There we go. You get something, I get something, and there we go. Well, the other tool that I use a lot, and we're going to spend a little bit more time diving in through that today, is to Snowball Analytics, which is that second link right there. If you would ever like to see how our portfolio that we're using for the example of this course, if you'd ever like to see how that's performing at any given time, this link right here. Now, if you're watching this video and you want to get access to all of these, it is the link below. I put all of the links to any spreadsheet that we use here, so that way you can sign up for those yourself or have access to those. Copy them, use them if you need them, make it something better if you want. So with going into phase 1, we have picked our 5 weekly payers. That's how we started. We did want to find those with an average dividend yield above 35. We've been doing fairly well. I think we've stayed above 60 for the most part. But we really want to look at those dividend yields that have stayed stable or increasing. And that's sometimes the challenge when you're playing with these leveraged as well as just high dividend yield ETFs, is finding that stable dividend yield over a long period of time. There's a few now that I've pressed paused on because I've seen those yields decrease over the past few weeks, and it's to that point where I'm going to press pause. So that is something that you want to keep an eye out on yourself. Whatever you use to track, if it's not Snowball Analytics, if it's just on a spreadsheet, great. That is something you want to continuously keep an eye on if you are mimicking this type of strategy where the main focus is cash flow. If you'd like to see the stocks that we're using, it's right. The link to this is right here. It's also going to be below, straight to that. I'm going to go over those in just a second. Remember, we're buying shares of our weekly payers evenly per dollar. And we are going to be investing that dollar amount, whatever that is, day. We're doing $5 a day. That's $1 per stock. You can adjust that to whatever dollar amount works for you. We're just looking really at focusing on growing our portfolio as evenly as we possibly can. This is how we're also going to use dividends to diversify. As we get more dividends, we're going to buy back into these until we're getting to that 5 dividend a week, which would be enough dividends for $1 a day into a new ETF, a new stock. That's how we're growing until we grow enough to where we can be buying into 10 weekly payers. We're going to continue to do this until we've hit our goal for phase 1, which is $75 a week in dividends, combined with the $25 we are putting in for this example. And then we're going to go into phase 2, which is buying the monthly payers. All right. Monthly phase 2 is exactly what we're going to be doing. We'll divide that and we'll put the that'd be $10 a day into the weeklies and $10 a day into our 10 monthlies. On that one, we're going to be looking for a dividend yield that is more stable, and therefore it's more stable over a longer period of time. We're okay with a lower dividend yield. I set that at about 10%. Kind of been even trying to force that to be a closer average of 15. But go with what suits your needs there. I like to have them as high as possible, but for me, my monthlies are more of, I like those to be the most stable that I can find now. Just like in the weeklies, those shares will be bought evenly by dollar, and we're going to be investing half of our dividends into the weeklies and half of that. So ultimately, all that's a fancy way of showing the math of we're buying everything evenly once we get to phase two. Once dividends start growing of that, we're going to continue to buy new monthly payers until we get up to 20, and then we're really just going to grow our investment into each ETF, each stock, until we have a total of 20 monthlies, which would be a total of 30 between the 10 weeklies and that. And then that's it. For our goal for this strategy is to hit $1,000 a week. That's what we're really aiming for. Okay, jumping right into those stocks. I put some notes over here, some updates. These are the ones that I'm pressing pause on. This one right here is actually stable. It's just lower than what I was wanting from my weeklies. Now, if that stays stable, I might, in my main portfolio, I've continuously invested into that because it is stable. But for anyone that's really trying to get going and they really need that higher cash flow from the dividends to ramp up their dividends early on, I might not pick that one. But that's just how I'm playing it. Like I said, I am investing that into my main account. Down below, I've got some of these monthlies. The only monthly that I press pause on is this JP Morgan equity. That one has just dropped quite a bit. So I'm going to keep my eye on that, see if it comes back up or see just where it stabilizes at and see how that goes. Now, I have been showing y'all in one of the videos of the ETFs that I've been researching. I have been updating those and putting more and more on here that I've gone through. I'm going to try to finish this. I'm doing about 10 of these a week. I'm not in too much of a hurry to get all of these researched and figured out, but I have found a few others, the ones that I like on here that I've already started investing in my main account, and some others that I've gotten from a few other active traders. I referenced this man several times, Joe McKiddish. I really like his strategy. Mine's very similar to his. He likes to buy even shares. I like to buy in even dollars. I'm more of a budget-friendly kind of investor, but he is very, very knowledgeable in what he's done. I actually got these bottom ones from him, and I'm going to continue to look into those. I haven't invested into all of these yet, but I am researching quite a bit into some of these to see will they fit with my strategy. I encourage everybody to go and listen to several other people that are active. Make sure they're trading and their strategy is closely aligned to yours, so that you're not getting skewed information or something that won't support your strategy. That's key. Just like in anything you do, if you're trying to lift weights and your goal is to get big, someone else's goal is to get lean, you probably don't want to follow the lean guy if you're trying to bulk up. You're going to be getting different results. I know that was an odd way, but it worked here. Same thing. If your goal is to grow equity and you don't care about cash flow, this is probably not for you. And there's a multitudes of ways of growing cash flow with using trading strategies. This is just the one that I'm really going for where I'm at. I'm really chasing that buying cash flow is what I'm looking at. All right, here's all the stocks that we've been doing. We're going to get into it. I've already filled out the weekly tracker, and if you see here, we've got everything has been doing well. The only one that caught my eye is this one. Which is Robinhood weekly paying ETF. It actually dropped 1 penny from last week, but it did still pay. I'm going to look at that yield and see what's the yield change on that on Robinhood Analytics, and I'll kind of navigate through there and show the different areas where you can find that. But everything else increased. We didn't have as big as growth of this week as we did for last week, but it was still a good growth overall as far as the equity. So that should support us in the long run as well. It's nice to have some green weeks every now and then. With that, though, as you noticed, hey, we've got another extra dollar here. So we are going to be picking our dollar and picking our stock of where we're going to put that dollar. As you can see, we've already done one in blocks. We've already done an extra dollar in Who. We've done an extra dollar in Tesla. So we're probably going to choose between Coney and Ulti to keep our portfolio investments as even as possible. All right, here is our portfolio. As you can see, I've already got it set for the week. We're actually up for the week, not greatly. But when you compare that to the overall month, we are still down, so it's kind of nice. I'm not too worried about this. We're not seeing drastic. Now, if you've been following any kind of other trading advice and what's to come, there's a lot of people that are predicting a crash in our near future. And if you follow all the indicators that predicted the dot-com crash, all the indicators that were utilized to predict the '08 crash, we're kind of seeing all of those in the same regard. So with that, I am predicting, I am expecting, I should say, I'm not predicting it, I'm expecting it to happen. We're going to continue with this strategy. We're going to continue to rock and roll. We might keep an eye on the dividend yields. We might switch out some of the ETFs that we're going to continue to invest in. But we're going to keep playing our dollars going into the best cash flow that we can. So looking at each of these, I am going to look at our total return to see which one is the best. I said Coney and Ulti. Looks like Ulti's still up and Coney's actually down. Actually, it's one of our second high. So, hey, good week for it to be Coney. I do want to double check, make sure I'm not lying to myself. Yes, Coney. So we're going to pick Coney. We're going to throw that extra dollar that we've got in dividends. As you can see, the two pluses here, that's 5 and 5. That's where that went. And then we got an extra $1.49 that we've added up. Remember, we've only been investing in even dollars, which means here in the next week or two, we might have our first $2 to invest. Might be next week. Let's see. That would be nice. And then we'll put $1 in two of them. $1 in one, $1 in another. Let's go ahead and buy our one for Coney. Y'all seen how I have everything reoccurring. Nothing's changed on that. And the only thing I'm going to do right here is put in our dollar. And that'll be queued for the week. And done. And it pops up right there. We're good to go. Nothing else has changed. I've already filled this out. I want to get over and spend some time. I'm going to try to make this short because we're actually trying to get over to a water park today. Okie dokie. So this is already synced today, and the market's not even been open the last 2 days, which would mean this is already good from the last market day. Just looking at the overview of what this mainly shows us, we've got kept at 60% passive. I know we've kind of floated between 60 and I think our highs was like 74, which is phenomenally good. Our weeklies are holding strong. We've got our, about a split this week. Today's biggest gainers are our TSII, which is Tesla, and our Yield Mac, which is the Ultra for Ulti, or I call it Ulti. The ones that are down, we just saw that one of the reasons might be that it's down, or the dividends decreased, the yields for who decreased this week. Would also might be because it's been dropping quite a bit. So we'll look at that one a little bit. Coney and blocks. We've seen weeks where all 5 were on the losing side. We've seen weeks, I don't know if we've had a week yet where all 5 were on the gainers. Anyway, we've got our calendar. We'll go over that, and looking at this right here side by side, what we've received so far, still steadily going up. We've got over $4 that we've received total. Looks like for August, we're still on track to receive over $5. See if that keeps going up, but we're already seeing this bar kind of ramping up. Still looking at 8 years before we're going to hit our goal of $1,000 a week. And actually on that 8th year, it's actually right at 55. So we're doing well. Hoping that we can cut a year off of that as we get ramped up and maybe get to a point where we're looking at adding margin. If the crash does happen and we can buy some significant opportunities at a discount, that could help us as well. There's a lot of things. This is just based on how the market has performed since our portfolio has been open, and this has been tracking it. Which means there's no way of telling actually how quickly or how long this will take. It's just an educated guess, calculated guess. I do want to get over here and I want to look at, if you haven't been checking, I love to check on this just to say, hey, this is what we're looking at making, our average monthly, our average annual. We're still back to every day. Looks like we're going to have a good week. If you look at where we started, what was that? 12, 20, 23, 25, 30, and then look and see some of those have already, every one of those has already increased quite a bit, which is nice to see it continuously going up. So I like to check on that. We already looked at our goal. What I like to look at, where I want to talk today, is on some of the portfolio of actually looking at my holdings. This is where you can see kind of an overview here. You can see the ones that we've dropped. So we have technically dropped 2.27% total. Not a drastic drop in any means. Looking at the main thing of the yield is, I think it's only been average. It was originally averaging at like 74, and now it's down to 60. You'll see that continuously fluctuate. What I am going to look at is I want to look at who and see HOOW and see how that is going. So if you look at the stock prices, they had already kind of dropped. We bought in, started this in July. So you can see like we're kind of bouncing right around here. Our average has been pretty stable. So the price hasn't really been affecting us too much since we've started buying into this portfolio, building this portfolio. So with the dividends, we do want to look at where those are. Our yield is down to 40. And I really I've been doing a little bit more of looking at where do I need the dollar per share to pay out at to really hit those goals based on the price of the current stock. And the weeklies, I really like them to be above 15 cents. And there's some that pay less than that, but 15 cents is really nice when they pay weekly. I think the lowest was, I was looking at that. I didn't write that down, but I was just kind of looking at what is the lowest in my main portfolio. It has all of them. What's the lowest paying per share? I think it might have been down to like 6 cents, and it's still holding good on on yield because the price of that share is pretty high. Or sorry, the price of the share is low, and you can own a lot of shares, and that'll help. So looking at where we are, you can see this is kind of taking a drastic drop. And you can see here it was 1911. So you can see that's had some big jumps up and down. Now keep in mind, HOOW is, and I highlighted it, the purple, because that is a leveraged. So when it's leveraged, when you see big upswings, you can also see big downswings because it's leveraged. It's basically putting a multiplier for whatever if anyone's gone gambling and you hit the max, whatever your bet is, it's going that. So when it's leverage, it's going to be a multiplier on whatever change that is. So if you get it right that week, you're going to see big upswings. You saw that here just a few weeks ago. Sorry, this is all the way. Yeah, no, that's right. Right here, sorry. Let's go up and make sure. This is the pay date, so not declaration date. Let's look at this. So we're looking at this column. This is when the dividend went out. So making sure. So yeah, August. And that 59 was in June. So since we've had it, you can see that paid us. There's a little blue little check mark paid. So these are where we're up to date. And we've seen it from there drop each week, kind of went back up that week, and then we're back down this week. This is always going to have the estimate based on the last pay. So that's not necessarily declared when that would be, or looking at that, as you can see, declaration date. The declaration date is typically earlier that year, and that's odd that this is saying the declaration date is last year. That's not accurate. These happen by, I believe, if you go to their main website, they'll actually say when on each one. And just to show y'all that, I do want to go to who's main website, and I'm going to see if that adds up, see if I am right. All right, distributions, weekly, declaration. Okay, see how that's different? So the other one said the 12, it was at December of last year, is all of these recently. I told y'all the declaration, which is when they determine, hey, this is what we have calculated based on performance, this is what we're going to pay. So you can see that's just a few days each time before the payday. So 4 days, about 4 days before the payday. So that's the only thing on Snowball here that is inaccurate. As you can see, the actual price per shares on Snowball, what is this, 1927, and here it is, 1927. So it looks like next week which is the 18th, they have already declared as of Friday that they're going to pay 39 cents. This is why I say having multiple tools, and just always, if you want to know, go to their main website. Snowball only has what has been reported, what has happened. So that's something where it's information. They don't have they're not linked straight to the website. It's linked to your brokerage account. It's linked to Robinhood. So it can only see what has happened, and that's where you need to make sure that sync on the first thing is really there. So it's always good if you really want to see, hey, is that going to go up? That would be one of my, as I just did. If something doesn't look right to me, I just go straight directly, as they say here in the South, go straight to the horse's mouth. I went straight to the ETFs provider page and looked at that. This gives me the warm and fuzzy. It was low. I was concerned. I did some research. I'm not going to press pause on this because it's bounced back just like it has in the past. I'm great with that. Which means Robinhood still looking good for us. I say Robinhood because this is Robinhood's ETF. So we're still looking good. We might see this yield come back up next week. It's either way, it's still above our threshold of 35. I'm liking that. Learning how to use these tools, learning how to know what you're looking for, do research. I spend a lot of time chatting with ChatGPT and other AIs, asking those questions, being surprised how much you can learn just doing the research, doing your own, just games of, hey, I want to learn. So that's something that I keep an eye on very closely, back and forth between what it's been doing, what it's declared that it's going to do, and really that yield. I also kind of every once in a while will look at the news and see. There's nothing usually on this. Sorry, I got a call coming in. Spam. It's always spam. And that's looking like it. So let me go back over. If you want to look at their page too, a lot of the times they'll push stuff up here. This, I don't see these update too much. But every once in a while I'll just kind of look and see if there's anything else here. And on the main page every once in a while it'll just kind of come up and see what's Robinhood doing. So I'm not going to sit here and try to read all of this to y'all right now. I'm just letting y'all know more. Where do I look when I want to find my answers? I look at the main page. I look at Robinhood as a whole too. You can always look on here and see what's the stock doing. If it will load, come on, load. All right, and then scrolling down and see, hey, is there anything else here? Give you some more abouts. Give you some history. That's your history of what it's done. It also recommends, hey, people also own this other stuff. But yeah, so not a lot here on this one. Surprisingly, with this as being Robinhood, you think there might be more to it. But keep in mind, Robinhood is not putting this out. Roundhill put this out. I believe this is Roundhill. Or, yeah, Roundhill. So it's more about what Roundhill is doing with that. So their strategy, Robinhood could be really great and Roundhood could not be performing well. Robinhood could not be performing well, but Roundhill's performing off of that and making a good spread off of that. Keep an eye on those two. It's more important that, Robinhood is doing well, or the main, and looking at these, if they are a single stock ETF, there is more risk in that. So keep that in mind. What I mean by single, this would be one. So top holdings, when you go to the section, if it's only mainly Robinhood, which everything here is Robinhood, keep that in mind that this performance is going to be closely tied to the performance of that single stock. All right. So, and it says weight calculation, combined stock position with position yield via total return swaps. All right. So read up on here, really understand what your ETFs are holding. Remember, we talked about diversification. ETFs are typically a multitude of holdings, a multitude of stocks, a multitude of securities. If it is a single security, a single stock ETF, there is more risk in that. You are really relying on the strategy of that ETF and how they produce those dividends. So it's important to understand that. Read up a lot on this, stay plugged in all of this, and you can always go to other tools that are free. YouTube it. If you really don't know, Google it if you really want to know more, and rely on what other people are doing. That's kind of been a lot of my strategy. Is I don't think I know very much, and is why I am just collaborating of my knowledge with what I see other people know and going, okay, cool. This is what I think. I typically go do my research. Hey, I think this is good. This looks well. And then I go to the people that I follow and I mimic that I've been, looking at their history. And if they've got it in their portfolio and they're looking at, hey, this is the same thing I'm looking at, then I will go. Now, not every stock that I have, not every ETF that I have is in every one of their portfolios, but quite a few of them are. So these are just the tips and tricks of a lot of people that I talk to. They're scared of knowing where to start, what is right, and they feel like they have to know everything before they can even start. And that's the biggest thing. Get started, invest what you are comfortable with. If it came down to it, you could lose everything. That can happen. But really just make sure that you're understanding the risk of what you're investing in. It doesn't matter if it's real estate, doesn't matter if it's business, doesn't matter if it's stocks, oil and gas. It does not matter. If it is an investment, understand the risk and understand that more times than not, the risk could be as great as losing everything. Well, with that, I want to cut this one short. I want to try to stay under that 30-minute mark for y'all. I did want to show y'all some of the things that I look into when I have a question of, hey, why? What's the reason why I saw that dip? Which today was the Robinhood Weekly Pay ETF, and looks like it's going to bounce back next week. So far, looks like we're going to be good, and I'm not going to be really worrying too much on that. Each week, I kind of pick one underlying that I want to kind of look more and more into. I'm still learning as much as I can. So happy to, if anyone has any suggestions, happy to look into those. If anyone has any questions and point me in a direction that I will go research and share what I find, happy to do that. But that's all I got here. Thanks everyone for tuning in, and hope everyone's portfolios are rocking and rolling and raining some cash. Without that, have another good week, and I'll see y'all next weekend.